All right. Today I got a very important topic to talk to you guys about. Like usual, it's always important, but this one is a big one here. Um, Too many retail traders are failing because of this big reason. And so if we don't have a conversation about it, you guys are going to continue to suffer. That's at the end of the day. That's the truth. Okay. So this one again, as normal, you need to grab a pen and piece of paper because I'm going to be giving you a questionnaire. And based on how you answer these questions will reveal to you how your trading career has been and will continue to be. Okay, so let's get started pretty quickly because I got a lot to cover and I want to do it in a efficient time. Okay, so the first thing you want to write down is this: the mental leap to become a successful trader is hard for the average retail trader because, watch this, watch this. Question number one. We're playing a game. I'm going to play a game with your mind to see so that you can see where you actually stand in the world of attempting to be a professional trader. Okay? So based on how you're answering the questions, it's going to reveal to you what type of trader you are and where you're struggling at. Okay. Now, these questions are going to seem unrelated to Forex, but in essence, they have everything to do with Forex. Wow. Johannesburg, Africa in the house. Okay. We got all across the world, huh? All right. And hello to all the thousands who will be watching this later as well. Please be proactive in the questions I'm asking because based on your response, it's going to help you understand what type of trader you are and why you've been struggling for so long. Okay. So again, the questions are going to seem unrelated, but they are related to Forex. It's just revealing you to you. Okay. So let's begin. Hold on one second. Let me make sure my camera is clear. Give me 1 second. Hold on. Okay. There we go. Had a little smudge on the camera, it looked like. All right. Here we go. Number one. 2 plus 2. Write these down. Write these down. 2 plus 2 equals what? Okay, 2 plus 2 equals what? Dallas, Texas in the house. Love Dallas. So 2 plus 2 equals what? 4. Okay, watch this. What goes up must come what? Down. Remember, we have Atlanta in the house. Remember, I'm actually asking questions that you will think is completely unrelated to Forex, but I promise you they are fully related to Forex, but it's revealing how the average retail trader thinks. Okay. So watch this. Watch this. Watch how this goes. And this is why you have to listen all the way to the end. Because once I wrap it all back around, it's all going to make complete sense. A lot of you guys want to know about market psychology and this and that. Market psychology has to do with the market players. And you're one of them because you're participating in the market. But you don't associate how your mentality is playing into your Forex career. So again, as I'm going through these questions, don't tune me out thinking, oh, it doesn't have any relation to Forex. It has everything to do with it. But you won't realize it until we get to the end. So again, let's go back. First question was 2 plus 2 equals what? 4. Okay. What goes up must come. What you normally say? What do people say? What goes up must come down. There are blank days. There are 24 hours. How many hours are in a day? 24. Okay. No matter where you are all over the world, we would all say there's 24 hours in the day. Okay. Next, fire is hot. Would you agree that if you touch fire, you're going to get burned? Now, we have a few people tuning in, more going to be joining later, but the few who's here, would you agree that if I say fire is hot, you would agree? You can anticipate. Watch where I'm going with this. You guys are going to miss this whole class if you don't get where I'm going. If you touch fire, would you agree that it's going to be hot? There you go. Thank you, Gabriel. And if I put ice on you, it will be, you can anticipate. Notice the word I'm using. I can anticipate that ice is going to be what? What would you guys say? We have a few people here. Go ahead and say it. Ice is what? If I touch you with ice, it's going to be hot or cold. What would you say? Thank you. Okay. If I go to work, I expect a paycheck. Type yes or no. Watch where this is all going to go when we wrap this together. You guys going to be like, dang, that was a good lesson. Okay. But I'm revealing to you how you think. If I go to work, I expect a paycheck every 2 weeks. Type a yes or no. Okay, we got yeses. Good. Now, let's go a step further. I'm walking you through your own mind, because once I have revealed the questions and why I asked them, you're going to see why I asked them, because this is where your mentality is when you trade Forex. And you're going to finally see, oh, I see why he asked those questions. So don't tune me out. Keep going. Now, let's go to the relationship game. Let's go a step further. Here we go. I know what mode they will be in, talking about whoever your significant partner is. If you're married, dating, okay, mom or dad, doesn't matter. I know what mode or mood they will be in every morning when they wake up. So in other words, I'm married. I'm asking myself, do I know for absolute sure what mood my wife will be in every morning going forward? Somebody already said no. There's no, they say no. Anybody else say no? How many will say yes? I already know what mood they're going to be in every morning when this person wakes up. Type of yes or no. I want to see. This is important. This is important to your trading career. Okay, here we go. I expect them to be the same in our relationship forever. Yes or no? Whoever your significant partner is, with the day you married them or the day you started dating, they should always be exactly the same. I should know what to expect from them. Okay, I'm getting a bunch of no's. They are not the same person I dated or married, and I want to leave the relationship. Now, how many people would agree? Hey, they are not the same person I met when we first got together, and I think it's time to end this relationship. How many people say that? Now, this is a different type of question. How many times have you heard people say that? That this person changed on me, and I think I need to leave this relationship. How many times have you heard that? Would you say you heard that from others? Yes or no? Yes or no? Have you heard other people say that? How long they changed over time? I think I need to leave this relationship. Okay, Sancha says yes. Others are pouring in saying yes. They heard it a lot. Very good, good, good. Watch this question. I change over time. Type a yes if you agree, no if you don't. Do you believe you change over time? Okay, all right, we're good. Last question, and we're going to put this all together, and then we're going to put your Forex psychology to the test. I expect them to understand that I am changing and evolving, so they should adjust to me. Would that be a yes or no? If you're in a relationship and you say, yes, I change over time, they should be able to adjust to me. Type of yes or no if you agree with that statement. This is about you. You're in a relationship. You know you're going to change over time, changing and evolving and growing and so forth. And so therefore, they should be able to adjust and change to you and adapt to your changes. Would you type a yes or no? Yes if you agree to that, no if you don't. Okay, somebody said yes if I'm married. Okay, yes, okay. Somebody said yes if you compromise. No, not really, you compromise. Okay, good, good. Okay, here we go. Here's how we're going to put this together. All of that was those questions for an exact reason. Here was the reason. The problem with many of you guys, and I'm going to go through each one of these, and you want to write these down so that you can realize why I asked the questions that I did, because it reveals your thinking process. Your thinking process when you enter into the markets, because I'm seeing all over the globe, and I'm mentoring groups of people all the time, but I'm seeing this is a tough move that people have not had the ability to adjust quickly enough to. So although you want a full-time trading career, it can happen for you, but your mind is not adapting quick enough to accept the rules of the game. So here we go. Number one, write this down. In the trading world, So under that title, Right Trading World, number one, it is not exact all the time, like 2 + 2 = 4. That's why I'm asking the question. Remember I asked the question, 2 + 2 = what? 4. Fire is what? Hot. Ice is what? Cold. Okay. And the reason I kept going through, there are 24 hours in a day. Okay. All around the world. I don't care where you live. We can count on the fact that there are 24 hours in a day. We can count on the fact that if I touch fire, it's going to be hot. If I touch ice, it's going to be cold. 2 + 2 all over the world is going to be 4. The problem is in Forex, 2 + 2 doesn't always equal 4. That's the problem. See, you're expecting this exact thing to happen when you touch the charts. But in the world of Forex, it doesn't work that way. It doesn't work that way. Let's keep going. Number 2, it is not a secure paycheck every trade. Please write this down. Notice where I'm going. See, a lot of you guys are not making the mental leap. All that I'm going to talk about to your left brain, which is your logical side stems from your left brain. Your emotional side stems from your right brain. Don't ever forget that. You can research it, look it up, whatever you want to do. But your left side of your brain operates your logic, your thinking, your processing, your data, the facts. But the right side deals with the emotions. And there's a divorce going on between the two things in your head. So when you come to the charts, you're expecting it to be factual data exact, just like 2 + 2 = 4. Fire is hot, ice is cold. There are 24 hours in a day. But it's not like that. And notice the other question I asked you. If I go to work, I expect a paycheck. See, these are expectations of exactness, but you're doing it in an arena where there isn't any exactness. There are probabilities. So write that down. Exact versus probabilities. Please write this down. If you want things to be better for you, you better be taking notes. Or else why are you here? Because until you make the mental leap between the two, you will forever be stuck in a perpetual cycle of failure. You go to work, you expect a paycheck. You go to the charts, there may be a paycheck. And here's the point. You go to work, you know if I work for a 40-hour work week, I should expect to get paid for 40 hours. Type a yes if you agree. Type a yes. I want to make sure you guys are tuning in. If I go to work for 40 hours, the employer should pay you for 40 hours worth of work. Would you agree? Okay, Gabriel's always the first one to answer. Good, we got the answers. Now, if I trade for 40 hours in Forex, I should expect all 40 trades to pay me. Would you agree to that? You put in 40 hours on the charts in a week, but not saying you have to do that, but I'm just simply using it as a comparative. So if I put 40 hours in on the charts, every one of those trades should work out. Okay, so we're saying no. See, logically, we know that. But why haven't you made the mental leap over here? Why are you crying when you do lose a trade? Why are you having a fit over here? Well, because see, the technique was wrong. No. See, what you're expecting is to have a black and white situation in a fluctuating world. And in your head, as I'm talking to you, you're like, man, I already know that. No. I'm not talking to your logical mind. I'm talking to that emotional mind, that emotional side that says when that trade didn't work out, I think something's wrong here. I think I need to see, and you flipping the script, as opposed to you being the consistent one in an inconsistent world. See, the whole game is flipped upside down when it comes to playing in the Forex world. See, in the regular world, there's black and whites. But in the Forex world, you're dealing in probabilities, and you have to be the black and white. In other words, you have to be the consistent one, knowing that over time, watch this, let's back it up so you guys can really start clicking where I'm going with this, because I know what I'm telling you, your logical mind being got it. But when you start trading, your emotional mind is having a fit and it's not grasping this concept. This is why you're all over the place, constantly thinking, oh, I need to go get me a new strategy. I need to go get me a new trading system. I need to go do this. Every week you're doing something different. So if you understood and really grasped what I said, then you know, stick to a consistent trading method that over time you have tested, it brings up pretty good results. You don't have to keep flipping the script every single week. So logically, all of this makes sense. But emotionally, when you're trading, it's still working on the world of exactness. Preciseness, precision, expectations. I expect a check after 2 weeks of work. If I work 40 hours, I expect to get a paycheck. I expect 2 + 2 to always equal 4. I expect the clouds to be in the sky and not on the ground. I expect the sun to bring heat. I expect the fire to be hot. I expect ice to be cold. See, all of that brings disappointment when things like that don't happen. So let's go a step further. I'm digging into your mind because I'm showing you where the flaws are, not only in every trader around the globe, including the ones I'm mentoring. This is where the mental leap is not happening because you're so used to what you had, a secure paycheck, a secure this, predictability. And then you stepping into an unpredictable situation and you're not emotionally handling it. So let me go further. Let's go further. And I talked about this in my class on last week. If I say that a trading system has a 80% win rate, how many of you would be overjoyed? An 80% win rate, meaning that if you took 100 trades, 80 of those trades are going to win. Would you be happy? Type a yes or no. And stay with me. Don't you leave because you need this. This is going to help you. If you had a trading system that made 80% win rate, would you be happy? Yes or no? It's a simple question. Yes or no? Okay. Okay. Good, good, good. You're talking to me. Good. Let me rephrase the question. Let me rephrase the question. If you had a trading system that had a 20% losing rate, would you be over thrilled? If people start advertising, hey, our trading system has a 20% loss rate, would you be a little more cautious? But what 20%? See, because here's the problem. When you have a trading methodology, 80% win rate, 70% win rate, 90% win rate, any one of those could be good. Do you know you can have a 65% win rate and still be a successful Forex trader? Did you know that? You can have a 65% win rate, and as long as you're managing your money, you can still be successful. The problem is that all makes sense logically, but emotionally, you ain't getting it. Somebody said 100% yes. Great. But and I'm glad you said that statement, because in our emotional mind, we understand 80% win rate means 20 of those trades are not going to work out. If you had a 70% win rate, that means that 30 of those trades are not going to work out. If I took 100 trades, 70 would win, 30 wouldn't. The problem is that in your mind, you don't know which 30 of those are going to be. See, it's not so exact. So you could have took the first 3 trades, and that was part of the 30 that lost because of the market's instability, which is what we've been seeing over the last couple of weeks, because I keep telling you guys something big is possibly on its way. So the market is constantly jumping around like crazy. So the first 2 trades that may have lost, you've fallen out. But you agreed that if you took 100 trades with a 70% win rate, let's do an 80% win rate. If it had an 80% win rate, that means 80 of those trades are going to work out. 20 of those trades will not. You don't know which one of the 20 versus the 80 are going to come. So when you lost the first 2 trades, why did you fall out and flap on the floor like some little whining baby? Because that 2 trades or 3 trades could have been part of what? The 20% that was supposed to lose. You should have anticipated that. But do we? No, we don't. We don't make the mental leap. Because in our heads, when I place a trade, did my analysis, everything should always work out 100% of the time. Logically, you said, no, I expect 80%, 20%. I'm good with that. But emotionally, that 20%, when it does come, you falling out having a fit. Especially if you're a poor money manager. Uh-oh. Uh-oh. See, people don't like the truth, but the truth will set you free. Because until you make this mental leap, you have no business being in Forex. Because there is an unpredictable pattern to it. But yet it turns around and then becomes predictable. Interesting. Let's keep going. And I hope you guys are writing this down. The first one I said, it is not exact all the time like 2 plus 2. Some of your analysis is going to work out to perfection. But sometimes they won't. And you have to ask yourself, is this part of the 80 or is this part of the 20? Some of you guys, you switching lanes, you switching trading systems, switching trading strategies like you switch lanes on the highway. You're in and out of lanes. So you're switching up so much until you never even figured out whether that strategy you had an 80 win rate or what it had. Because every time you lose the first 1 or 2 trades, you're switching up and going to grab a new indicator. You're going to go get a new trading system, a new strategy, a new this, a new that. You're unstable. And notice what I said earlier. You have to be the stable party in this Forex arena. It is unstable. But you have to be the stability. You have to be the consistent one. It is not always consistent, but you have to be. Oh, this is hurting somebody. Let's keep going. Your analysis may be right, but it could be possible that the market is reacting to outside stimuli and therefore acting out of its norm. Under normal circumstances, under normal trading conditions, yes, you can do your supply and demand zones, your support and resistance, your this, your that, whatever you want to use, that's fine. Okay? Even if you're using our trading system, you can use the 415 strategy, the D1 strategy, you can do whatever. Okay? And normally it will work. However, if the market is reacting to an outside stimuli, then the issue is that no matter what you did as the stable party, it's going to react to outside stimuli. For an example, hear me good. My wife is a very consistent person to wake up next to. She wakes up with a smile all the time. She's a joyful person. I can't wait to do the interview with her so that you guys can meet her. She's a very pleasant person. Very pleasant. Very happy, happy-go-lucky, light-spirited. So when she wakes up, she enjoys waking up to morning, especially when it's sunshine. She's a nature girl. So when the sun is beaming through the windows and everything else, she's just so light and airy. But I remember when her sister was dying, there was a change in her sleep pattern. There was a change in her behavioral pattern. And I could have got mad like some of you guys are doing because I'm saving your marriage or your relationship even as I'm trying to save your trading career at the same time. So hear what I'm saying, because this is where your problem is. That's why I asked the questions. I flipped it from the technical 2 + 2 = 4, 24 hours in the day, fire is hot, ice is cold, and I flipped it to relationships. Now we're getting a bit deeper. I'm going to save your trading career and I'm going to save your marriage or your relationship you're in, because here's where your head ain't clicking. When my wife was in the process of losing her sister, she wasn't waking up happy-go-lucky, regardless of whether the sun was up or not. It didn't matter, because there was an outside stimuli affecting her mood. And so she wasn't so happy-go-lucky at the moment. Type of amen in the box if you understand what I'm trying to tell you. So at that point, as her husband, I had to make a decision. Do I get upset that she's not the normal happy-go? Why are you not waking up happy like you normally do? Why you not keeping it? What's wrong with you? You tripping. How many would agree? Type a yes in the box if you agree. If I came at my wife at that time, that I would have been a horrible husband. What's wrong with you? Why you ain't acting the same? You always wake up happy. Why you not? Would type a yes in the box if you agree that my wife going through the process of losing her baby sister at that I would have been a horrible husband to have opened my mouth and said something dumb and stupid as that. Would you agree? Type a yes in the box if you agree. Because this is some of y'all, by the way. And the same way you are in your relationships is the same way you are in the Forex arena. So you want what you expect because you are there. It doesn't matter that there was an outside stimuli. It's just you want what you want. And if they don't match up to what you want, you don't know how to adapt to the fact that their life is being impacted by an outside stimuli that had nothing to do with you, but now you're making it all about you. So now y'all arguing. So now this person who was already dealing with an outside stimuli now have to deal with you. Now they're dealing with two things that's wearing them out because you don't know how to make the mental adjustment and adapt and change to the fact of being a person who they were supporting to being a supporter of them. Thank you, Gabriel. Selfish. And that's the exact way people approach the market. As if the market is always supposed to pay you on every trade because you the one who placed the trade. It didn't matter that the feds came out saying that they're going to do this and then the market started going crazy. No, because you placed the trade, the market is supposed to remain the same. And you do the same thing in your relationships on a personal level that you're doing in the Forex market. So you leave no room for it to adjust and react. And so you get mad. Even though you agreed that the market, if you had a good trading system, even if it had a 70% win rate, that means 70 trades out of 100, 70 trades would be winners, but 30 would be losers. You agreed to that. But when the market starts reacting and bringing up that 30, you the one having a fit. You the one tripping. You the one don't know how to adapt. You don't know, you ain't the one who just sits back and say, you know what, maybe I think this is not a good time to trade. You don't know how to stop trading. See, you think you're the, I had a word, but the Lord held my tongue. You think you think you the stuff. And your arrogance is bringing down not only your personal relationship, but it's also bringing down your Forex trading career because you won't humble yourself and realize I'm not in control of this. The markets are in control of themselves. I'm just a participant. And my job is to hear what it has to say, not to come in telling it what it should do, because here's where I drew my trend lines. Here's where I drew my supply and demand zones. Here where I put my this and that and this and that. See, you coming in as the authority in an arena where you're not the authority figure. And you're doing that in your personal relationships. For some of you guys, you're doing that in your personal relationships and you're doing it in your Forex career. And then when you put out your demands, you're expecting the world to submit to what you said. And when it doesn't, you're angry. Interesting. But notice I asked the question, how many agree that you change and grow and mature over time? Everybody say yes. And then I asked how many believe that if you're in a relationship, the other partner should know how to adjust and adapt to your growth and change, because we all change and evolve over time. And majority of people said yes. If I'm in a marriage or relationship, yes, we should be adjusting and changing. They should be adjusting and changing to me because I'm growing, maturing, and changing. People said yes. But the question is, why aren't you doing that for that partner and why aren't you doing that for the market? See, it's all about you. I know this is slap in your face, a wake-up call. So next time during this week, when you approach the market, you approach it with a little more humility It's not that your trading style was wrong. It's just that when the market is reacting, which, by the way, heads up for those who tuned in and the thousands are going to watch this later, glad you tuned in here. This week, I think it's Tuesday or Wednesday, one of these days this week, the market is going to possibly act a big fool. Okay? Matter of fact, sit right there. I'm going to give you the reason why. Make sure you're writing this down. I told you I'm going to give you guys good information if you tune in. Let me tell you what's going to happen. Hold on one second. Hold on. Let me get this to y'all. Y'all need to know this because it's going to happen this week. Okay? And if you approach this market with your arrogant attitude, you're going to get ate up. Let me go down to it. Big one coming out. All right. Everybody write this down. Wednesday, beware. And possibly leading up to Wednesday, beware. The Feds are going to be announcing, write this down. The Feds are going to be announcing their interest rates. Now, I'm telling you in advance, hear what I'm about to say. The U.S. economy, in my personal opinion, is still not strong. I'm teaching a bonus lesson. This wasn't in my notes, but I'm giving it to you as a bonus. I've been teaching you guys for a long time here on this channel for free about how to understand interest rates. And I'm going to repeat it. Plus, I'm going to tell you what's coming up this week. And this is very important. Okay. The Swiss is coming up with interest rates, by the way, this week. Japan is coming up with interest rates this week. GBP is coming up with interest rates on Thursday. So you better be glad you tuned in. Okay. Fed Chairman Powell is going to be talking on Friday. But let's go back to the main one. Okay. Hold on. Let me go back. Okay. Here's the big one. The big one is this. Watch this. Not only are they going to have the Fed interest rates talk, but the FOMC, the Feds are going to be talking about their economic projection. This is huge for the market. The market will, write it down. The market will react to this, and not just the USD, but a lot of the pairs that's connected or interconnected, because currently, until the dollar falls, which in my opinion is inevitable, okay, it's on its way, the dollar possibility of the dollar collapsing is almost inevitable, but in the meantime, it's still the top leading currency. So what impacts the dollar will impact other currencies around the world. Please type around the world. I want to make sure that I got people listening in who's currently here and the thousands who will watch this later. Please tap yes or type around the world. I want to make sure you guys are tuning in and hearing exactly what I'm telling you. Thank you, Kenyon. Okay, he's the first one who said it. Around the world. Type around the world. I want to make sure you guys are getting this, because this is one of your problems too. You don't never check news before you take trades. And then when something happens, you be like, oh man, no, it's you. You the problem, partner. You the problem. Because you expect everybody to adjust and adapt and change to you when you tripping, but you don't expect nobody else to have that opportunity either. For you to learn to be the person who adapts and adjusts to them. Everything all about you. And that's why you're failing. The markets will react this week. Expect it. So remember the 80-20 rule. 80% of your trades may win, 20% will not. This week may be that 20%. You understand what I'm saying? This could be the 20% that comes up this week, because it may be unpredictable. We don't know what they're going to say. Now, now watch this. I do know one thing that they possibly will say for sure, but it doesn't matter. Because the economy is not strong, let me reverse it like this. For those who may watch this later and you say, oh, I didn't know that. anytime there's interest rate news, there's an easy way to figure out whether they're going to raise the interest rates or lower them. Now, here's the difference, though. They can make a promise to raise them in the future. You will see that. Oh, in the future, in 2022, we're going to raise interest rates. That's fine. They can make a false promise, like the AUD did and the NZD. AUD, I think that was them, or the NZD. They made a promise that they were going to raise the interest rates. But then this last go round when they reported, they didn't, like they promised. See, all they have to do is promise it, and then people start buying their currency. Okay? That's how they boost their currency. Because people say, hey, I go to, and I taught this before, if you go to Bank A, watch this. It's a little bit off topic, but I'm going to get back to it and close out. But hear me good. And I teach this to my students all the time. That's why you need to be coming to class. Bring your behind the class if you're in simplicity. Bring your butt to class so you can learn. All right. Consider interest rates like this. Bank A and Bank B. You have $10,000 and you want to gain interest on that $10,000. You go to Bank A and Bank A says, if you deposit your $10,000 with us, we will pay you goose egg, no interest rate. But we're going to hold your money and we're going to loan it out to other people, but we ain't going to give you no interest rate. No interest. Now you go to Bank B. Bank B says, we're going to increase and pay you interest on your money if you put your money in Bank B. Bank A ain't going to give you nothing. They're going to make money off your money because they're going to loan it out at an interest rate to help people want to buy a car, buy a house. That's what they actually do with your money, by the way, just in case you didn't know. When you deposit your money in that bank, it ain't just sitting there waiting for you to pull it out. They loan that money out to make money off of your money. That's what they do. But they ain't paying you. Bank A ain't paying you no interest. But you go to Bank B. Bank B says, we'll give you a 10% interest or rate of return. Here's the question. Watch. Would you put your money into Bank A or Bank B? Type. Would you put your money in Bank A or Bank B? I'm teaching about interest rates so that you'll learn how to read this news. Which one would you put your money in? Bank A that pays you nothing or Bank B that's going to give you 10% interest? Which one would you put your money in? Type. Come on. Type. Because if you don't get this, I'm sorry, I can't help you. Good. You would automatically put your money in Bank B. So how does this relate to Forex? When they're talking about interest rate announcements, they only need to promise to raise interest rates and people will buy the currency, because what it's saying is, if you buy my currency today, in the future, I will pay you interest on it. That's why when the interest rate news come out, it's very important to pay attention to it if you're in a trade. Because if you're in a trade, such as, let's say, for an example, this week, if you enter the USD JPY, for an example, and the feds come out and say, we're going to raise interest rates in the future on the US dollar, I guarantee if you're in the USD JPY, that trade is going to shoot to the moon. You're going to make a lot of pips instantly because they promised to pay people who own the dollar interest. That's Bank B. But if the feds come out and say we're leaving the interest rates the same, that is going to be a problem, and potentially it could go down because people are treating that just like Bank A. You ain't giving me nothing on my money, so why should I hold it? And what do? People sell it off. Type a 50 in the box if that example made sense to you so far before I go forward. I want to make sure you guys are always tuning in and understanding what I'm telling you. Type a 50 if that made sense. So if they say they're not going to raise interest rates, potentially the dollar could go down. But if they say in the future, notice they don't have to do it. They only have to make the promise that in the future they're going to do it. Then your trade will shoot through the moon. Just like that, in a snap. That is why you want to stay away from trading interest rate news until after the announcement, because you don't know what they're going to say. And it ain't like they got to do it. They just have to make the promise. Good. I'm seeing them 50s. Now, why is that important? I'm telling you, how do you know if they're going to actually raise the interest rates or not? Well, here's how you know. Based on the strength of the current economy, is there plenty of people back at work who has the ability to put tax money into the coffers or into the machine called the federal government? No, there's 10 million opening out. Unemployment is running out. So people will start going back to work, but currently they're not. Therefore, if that's the case, we're still dealing with a weak economy. Therefore, chances of them raising the interest rates is a no-go. Number two, and this is big for those who stayed around, you better thank God that you're hearing this. From sources all over the world, here's what I've heard. Remember, I told you a collapse of the dollar is almost inevitable. Another way I know that they potentially will not raise the interest rate, and this is just bonus information, we're going to get back to what we were lecturing on, but you need to know this stuff. Another reason why they potentially will not raise the interest rate is because the moment they raise interest rates on the dollar would instantly collapse because we're so big in debt. So for them, leaving the interest rates where they are, low, cheap money, is good for the economy to make sure they're not tackling inflation by raising. In order to tackle inflation, they have to raise interest rates, okay? Make the dollar more valuable. But if you do that, instant collapse to the US. So what do you think they're going to do this coming up week? They're going to say, no, we're not raising interest rates. So that's how you can tell. Strong economy, raised interest rates. Weak economy, interest rates left alone or lowered down. Now, we are already at the lowest point where we can go with interest rates, because if you ain't 0 plus 0 equals 0, okay? We're already at 0 basic. We had what, I think a quarter point interest rates. I mean, after that, it's just no interest at all, right? So it's not going anywhere. And I'm not trying to confuse you, but just hear me out. So as far as them raising interest rates, that's fine. Am I telling you to take a trade on that? No, because here's the problem. What else can they say? It's the more dangerous part to your trade. See, I already can understand what they're going to say before they say it. And I've been accurate almost 100% of the time when I say it about interest rates. The problem is that it's not what they say they're going to do today. It's what they say they're going to do in the future, because they can lie. And that's what caused the market to react. Type a yes in the box if you understand what I just said. This is why you have to be willing to adapt and change and be adjustable in an unstable market. It's not like 40 hours you go to work and you get a paycheck. But that's what you're expecting when you place your trades. I place a trade, I should be getting a paycheck. You don't even think about none of this stuff. And unfortunately, nobody's teaching you to think about none of this stuff. Oh, see, look at how I mark up my charts. Look at how I mark up my charts. Look at how I mark up my charts. That's what everybody on YouTube doing. Look at how I marked up my charts, but ain't nobody telling you about this part. And so you thinking, watch the concept. So you're thinking that all I have to do is mark up my charts and get a paycheck. Mark up my charts and get a paycheck. And when it doesn't happen, you're having a fit. Come on, this is some good teaching. Do you see how your mind is not making the shift over to be able to absorb some unstable situations that comes in the market, which you know happens? Logically, you know this happens, but emotionally, you act like you ain't supposed. This ain't supposed. Why is this not happening? Why is this happening to me? Why is the market after me? Why my broker is going after me? My cat is trying to kill my trade. Huh? I thought you agreed that 20% of your trades ain't gonna work out. 80% of them will. I thought you agreed 70% of your trades, if you took 100 trades, 70 of them gonna win, but you having a freaking spasm when the 30 hit you. And possibly because of this, outside stimuli. Just like my wife, when she was losing her sister, she had an outside stimuli that was impacting her. And it was my duty as her husband to adjust to the change. Oh my God, this is some good teaching that you don't get nowhere. All these thousands of Forex videos, ain't nobody talking about this. I wonder why. And now can you understand why your expectations have been thrown off? You expected that once you draw this or take this trade with these rules, it should always work out. You were expecting an exact paycheck. Well, I thought this was supposed to, I thought this was supposed to work. It does 80% of the time. See, that's the part you keep missing. And until you make that mental leap over, you will always be failing in Forex, because every time you take a hit, you're going to get discouraged and want to quit. Every time you take a hit, you're going to have a spasm and think it's time for me to buy a new trading system. I need a new strategy. I need to, no, 80-20, 70-30, baby. The markets are reacting sometimes to outside stimuli, and it is your job to manage the trade. Let me be honest and transparent. And some are in the signals group. NZD USD. First time we entered it, we lost the trade. Went back in it, won the trade back. Got our money back. GBP, JPY, got in it, first time won. Got in the second time, it didn't. Got back in it, won again. Same pair. See, you have to adapt and change and be adjustable. You don't throw up your hands and just say enough is enough, I'm done. No, sometimes you right there, you were actually right about your analysis, but something may have came out. And a lot of times, watch this. This is why you have to be adjustable. I told you guys what news is coming up, but sometimes, just like that big event that happened where out of the blue, AUD and NZD shut down the country over one COVID case. Who anticipated that? That wasn't in your news event. That wasn't fundamental. It just happened. People all over the globe, including professional traders that I work with, they all lost on those trades. And they just took it in stride and kept on moving. Nobody saw that coming. You mean you're going to shut down the whole country over one COVID case? Yeah, they did. Who would have known that? That wasn't part of my Forex strategy. And it cost me money in my trade. Didn't feel good. But what can I do? Go back at it and try again. Let's wrap up. Your job is to adjust and manage the trade when it has a mood swing. Watch this. Watch this. You know, one of the biggest ahas that I had to get, and that many of you guys are not getting, every time a person talks about managing the trade, watch this last one. This goes, pow, slap you right in your face. Every time we talk about managing a trade, particularly when you hear that term, for those who've been trading for a little while, the first thing that comes to mind is, okay, when I'm in profit, where do I move my stop loss to? Do I move my stop loss to break even? Do I move it to just below break even? Do I move it 5 pips in or 10 pips in when I'm in the trade? So when you hear managing the trade, isn't that what you think of? Type a yes or no. I'm waiting on you guys. Type a yes or no. I want to make sure we're all on this last point because this is big. If I say manage your trades, do you believe I'm talking about moving your stop loss to break even? Just below break even? Okay, we're getting the yeses. Perfect, perfect, perfect. Watch this. What if you notice, and watch this, little bonus before I go forward. The smaller the time frame, the more attention sometimes you have to pay attention to your trade. The higher the time frame, the less attention you pay attention to the trade. This is why the rich people trade on the daily and the weekly, because it's so far out that it can absorb the day-to-day fluctuations that I'm talking about. So they don't really have to manage the trade a lot. But at the same time, they use a very large stop loss that the average retail trader is completely uncomfortable with. If you talk to the average banker, if I was talking to a group of institutional traders, me talking about using a 100 pip, 150 pip, 200 pip stop loss, they're like, why are you even bringing that up? Talk about something else that we really understand, that we need. We already do that. We are on a daily time frame. We're on a weekly time frame. We know that already. So you're wasting our time and money. We didn't pay you to come here and talk about that. Talk about something else. See, it's commonplace knowledge in the big boy arena, which everybody keeps saying, oh yeah, market makers method, beat the market makers. You will never beat them because you don't have their mindset. You're playing against the big boys with a big mindset with your small mindset. So the average retail trader will freak the heck out if I said, hey, trade on the higher. If you don't want to deal with the daily fluctuations, trade on the daily. Trade off the 4 hour. Trade off the weekly. See, that's normal commonplace knowledge if I'm talking to a group of institutional traders. And they will place their stop loss, go on a cruise, be boating, driving their Mercedes or Lamborghinis. You see the rich people, these Wall Street people who everybody hates, but nobody wants to do exactly what they do. Because they know there's going to be fluctuations. So they put their self way out there, away from harm, because they're going with the flow, the overall flow. And then they go live their life and run other businesses or whatever else and be mega rich. But the average retail trader, that makes sense to them, but they can't handle it. So now let's get back to my point. The point is, when I talk about managing a trade, all retail traders typically think, oh yeah, when it's going into profit, I need to move my stop loss to break even, or I need to move my stop loss. See, that's when it's winning. But what do you do if it's going against you? But you know your analysis was right. And maybe it's just having a hiccup because of a news event. Would you be willing to move your stop loss out just a little bit further? Because of this temporary situation, you did your top-down analysis. Watch this, top-down analysis, meaning you started from a higher time frame, got the understanding of, okay, here's the direction that this is going to go. I clearly see and understand off the daily time frame that it is in a downtrend. So I took a trade heading down. However, this thing temporarily is going up against me. Are you capable of handling the fact that you might have to move your stop loss out a little bit out because you had a 20 pip stop loss, but it deserves a 40 or 50 pip stop loss to absorb what just happened without getting your stop loss before dropping down again? See, nobody want to accept that that's part of managing their trade, moving it out just a little bit. Because I know where it's going to go. It's just doing a pullback, or maybe it's reacting to news. And so my job as the trade manager is to manage the whole trade, not just when it's in my favor, but what do you do when it's going against you? Now, somebody said, and they brought up a point, and thank you for sharing that. They said a lot of traders have such small accounts. But watch this, and I do this demonstration all the time in my class. I take a $100 account for an example, and I would take a trade with a 0.01 lot size, okay, 1% of the count. You can even take a 0.02 on a $100 account. And I do this all the time. And I put it out all the way to 100 pip stop loss. And with a 0.01, do you know it's still sometimes when you take a trade, it's only like $5? So even if you lost that trade, it's only $5 out of a $100 account. If you have 2% on there, it's only like $7, $8 out of a $100 account. So when you say managing the trade, you have plenty of room to adjust to the market. But the problem is, going back to the retail trader and their real issue. See, because I hear that one all the time, but that is not the issue. The issue is what I said at the beginning, 1 to 2% risk. See, nobody wants to do that. Why? Because I got a $100 account and I'm trying to flip it to 1,000 this week. So therefore, they're putting 25% on there, 30%. 40% of their whole account on one trade. So therefore, they don't have the room to move it up and down. If you used a 1 to 2% risk, you could have moved that stop loss twice as much and still have plenty of room if the trade didn't work out. So that is another myth that's floating around in the retail arena, not in the big boys arena. If you guys agree with that, type of yes in the box if you understand what I just taught. I'm telling you, I'll be dropping these gems. It's much easier for me to have a discussion with banks and institutions than it is with retail traders. Why? Because mentality. Poor man's mentality. Not you, the person who brought this up, but I'm glad you brought it up. So I don't know you personally, so I'm not saying you, but I'm just talking in general. This is why I have such a struggle and get attacked. Because if I'm talking to a group of banks and institutions, for me to have this conversation today, I will probably, they say, man, give me my money back. We didn't pay you to come down here to bring this bull crap. We already know that this is trading basics 101. But to a retail trader arena, this is like brand new knowledge. Even when we're sending out signals, sometimes Mr. Elvis or I will say, hey, you have to adjust it. Hey, something is coming up. Adjust your stop loss to this. What? Wait a minute. I thought you wanted to make some money. Well, your stop loss is too big. Okay, then we're going to use regular stop losses. Stop loss get hit. Then we have to re-enter the trade. Wouldn't it have been better to just use a larger stop loss, adjust the stop loss, stay in the trade, and then when it flip back around, boom, everybody make money? Or do you want to get a hit and then have to re-enter the trade? Which one do you want? See, it's a lot of complaints, but it's always from the retail traders who don't know nothing and don't even have money in their account. But they're always trying to tell you what to do because they ain't adjusted their mind. But if I'm with banks and institutions, if they see that they're in a trade, yeah, hey, I'm wrong. They're only risking 1% to 2% of their whole overall portfolio. So for them to adjust it maybe to 3% to move the stop loss out a little bit, what does that matter to them? They don't care. It's only the retail traders who don't know nothing, but they talk like they do. And they're so hard to teach because they think they know everything, but they have no proof because their pockets are flat. They're always trying to tell you what you should be doing. They're always trying to say who you, the scammer, you to this, you to that. Like they became the authority figure, but they make no money at all. And they're hard to teach. Hard to teach. Stubborn. And wonder why they can't find success. And again, if I'm talking to institutions, do you believe I would even have to have this conversation today? No, because it's commonplace knowledge amongst them. So if you want to learn to be like the big boys, you have to adjust your thinking like the big boys do. You can't come to where the big boys are wearing jockey straps and you still got a pamper on your mind. Huh? This is real talk. I got 2.5 minutes and I'm done. You're still thinking like a child. In the Bible, there was a verse where Paul said, when I was a child, I thought like a child. I acted like a child. I did things like a child. But when I became grown, I became a grown man. I started making grown man decisions. And I'm paraphrasing that scripture, but that's what he said. I had to mature and grow up. Nothing about the world changed. What changed was his mentality. You're the problem. And until you make the mental adjustment, not only in Forex, but I'm also teaching you about why you're having relationship issues, because even in that arena, you're so headstrong. And that's why nobody want to be with you. Don't tell me, oh, I can't find a good woman. I can't find a good man. No, you're not the good woman and you're not the good man. That's the problem. You're running into good people, but you the bad person. But you don't see it because you think you're right all the time. And you don't adapt, adjust, and change. So when I talk about managing the trade, I am talking about don't just manage it when you're in the winning part of it. But what if you know your analysis is right because you did a what? Top-down analysis, meaning that you went to the higher time frames, daily or the weekly. You seen, okay, here's where the trend is going. So I'm gonna enter this trade into this way, this position, which is the best entry point that I could find. And then if it starts pulling back, which sometimes it will do a pullback that you didn't anticipate. That's okay. You still know exactly where it overall is going to go. That is why oftentimes when you enter the trade, it does a pullback, you jumped your butt out, or you had a tight butt stop loss as opposed to just adjusting the stop loss a little bit based on the higher time frames. Stop using these 10, 15 pip stop losses based off the higher time frame. You know, you might have to give it a little bit more cushion in case it does a pullback, right? But you don't. You don't. Well, because see, 40 pip stop loss is too big. Okay, then why are you here? because you're trying to tell the market what to do. I put my stop loss here, so you should not pull back no more than 5 pips because I got a 10 pip stop loss. So you shouldn't pull back no more than 5 pips because I got a 10 pip stop loss. See, that's you coming in with your arrogant attitude trying to tell the market what to do, and you broke. The market showed you on the daily time frame, the 4-hour time frame, it needs more cushion for the pushing, baby. But you didn't adjust because it's all about you. And then when the trade didn't work out, you want to blame the market, you want to blame anybody else, you want to blame trading system, you want to blame everybody but you. You ain't got no business to be in here, to be honest with you. I'm just being honest. Some people, they really don't have any business being in Forex because it's an unpredictable market with predictable patterns. But sometimes those patterns will play out a little differently than what you anticipated, and your job is to adjust to it. And that means whether you're in a positive trade or a negative trade, sometimes you have to adjust it a little bit. How many times have you gotten into a trade and it went against you, but then you went back the next day and the thing worked out perfectly, but you got tapped out or you shut down the trade too early? Why? Because you didn't adjust that stop loss a little bit based on the higher time frame. How many times did that happen to you? If that happened to you, type a yes in the box. Let's just be honest. Let's use some integrity here and be honest. How many times did that happen to you? Has it happened to you? Come on now. Has it happened to you? Yes, 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 yes. Type the yes. Come on, bring it. Yes, 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 yes. Put them in there. Put them in there. Type yes, 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 yes. Yes, it happens. See, because you've been taught to only adjust the trade when you're winning. So when do I move my stop loss to break even? Wait a minute, baby. When do you move it out a couple extra pips based off of what just happened in the market to avoid getting tapped out too early? And if you were only using a 1 to 2% risk, don't tell me ever again that you couldn't afford to do it with a small account, big account or small, because if you were trading with the right leverage amount, you could afford to do that. I do demonstrations like that all the time in class. $100 account, 2% risk or 1% risk. There is no way possible you can tell me that you cannot afford to adjust that lot size out. I use a 100 pip stop loss sometimes on a $100 account, and with a proper management, it's only a $7 loss. So if it hits the stop loss, you only lost $7 out of a $100 account. So come on now. Come on now. Where's the real problem? Is it the trade amount? Is it the lot size too big? Or is it the fact that you doing too much and you breaking rules? You got 25% on that trade. And therefore, that's why you can't afford to move that stop loss out a little bit, even though you know you should based on your top down. Notice what I keep teaching you. I'm giving you bonus. I'm giving you bonus. Even if you're not in my group know they better be doing top down because I teach that. But if you're not in my group, I'm giving you a bonus. Top down. Now, I ain't going to give you how we do ours, but you figure out top down analysis. Go out higher time frame, anticipate where things are happening, and then you scale down to the lower to enter. And when you do that, you realize possibly you might have to adjust that stop loss out. Kenyon, there you go. See, he's in my group. He know I'm telling the truth. I teach this. I ain't got to make nothing up. I teach. Because if I can teach it here for free, you darn sure know I'm going to teach my group who paid to come to class. I don't make nothing up. I don't need to lie. Because I'm fixing the flaws of the average retail trader. Your mind is your own enemy to your personal life and also to in Forex. You don't adapt. You want things to be the way you want it to be, and the world don't work like that, baby. Your job moving forward, and I'm closing here, your job moving forward is to condition your mind. I'm reading a book now called Forex Mindset by Jared Martinez. I recommend that book to every freaking body. It is an amazing book. And it's a Forex, I'm not going to tell the Forex Mindset. It is one of my all-time favorite books for Forex. Order it off Amazon, read that book. And when you read that book and digest what I'm talking about, you guys are going to see for the first time, your eyes are going to be open. Because if you're trying to do this full time, you need to be a full-time person. Start studying your craft. Stop shortcutting everything. All right. I'm gonna let y'all go. I'm 4 minutes over my time. Usually my class is supposed to be 1 hour on Sunday. We're 1 hour and 5 minutes. I hope this was helpful to you guys. If you found this to be helpful, type a 500, please, so I can know that I'm giving you good content. And again, I don't even what they call that, monetize my channel. So nobody's paying me to do this. This is 1 hour out of my Sunday because of love for you guys. I don't monetize my channel. So it doesn't matter how many views I got. As a matter of fact, and I can't say this publicly because I just got an email. Guess what? Levi's. I get emails all the time from companies wanting to partner with me and this and that. Now, Levi's is huge. They're coming out with a new clothing line. And they just sent an email 2 days ago. I haven't even responded to them yet. I might. That's huge, right? But so far, I haven't done any business with anybody. I haven't monetized my channel. So everything I'm doing on here is simply because I just want to help the average retail trader to not go through the pain that I went through in my trading journey. It's out of love. Nobody's paying me this. My wife is being charged an hour of my time away from her to make sure I'm helping you guys for free. Because I know what it feels like to be on the losing end. It hurts. It makes you a very angry, cynical person. But it doesn't have to be that way if people will teach you the extra. Yes, you can make money in the markets, but the problem is you also have to be an adjustable thinking person. It's not like a 40-hour work week, 9 to 5, pay me now. You can do 40 hours on the charts and maybe you get with good money management. Guess what? And I'll leave you with this. Let's say you had lost 4 trades in a row using a 2% risk. But then that last trade works out and it runs. I mean, that thing runs because it actually caught the trend off the higher time frame. That thing could win back all your money plus some. Now, I'm not suggesting that you take 4 losses, we don't do that. But what I'm saying is that if you do the right thing and be consistent in the inconsistent market, the market is always willing to pay a consistent person because it's inconsistent. It's like dating a person with a split personality. If you have 2 people who have 2 split personalities, it's never going to work. But there's a potential for it to work if one person has a split personality, but the other one has a very stable personality, because the other person with the stable personality will stabilize the relationship. Do you get that? The stable person will stabilize the relationship over time so that when the person with the split personality splits into the wrong personality, okay, you handle it, but then when they split back to the normal personality, you guys get back in the flow. So it has the ability to last over time. Why? Not because of the split personality person, but because of the stable person. You are the stable person. The market is the split personality. Sometimes it will work to perfection, but sometimes it splits over and start tripping. But you have to be the person who's the stabilizer in the relationship and be consistent. I hope you guys get this. When you become consistent, you will begin to see consistent results over time. This is why, and let me leave you with this too. This is why the average person who is good at what they do, they don't judge their performance over the trading day or over the trading week. They actually tally up their amounts at the end of the month. Some of you guys have been sending out emails so you can see over the last 3 months, here's what our overall results were for the trading month, because that's how you actually test your performance over a whole month span to give it time. Because like weeks when it's like this, FOMC week, yeah, it's going to be a little bit rocky. If you go and do like non-farm payroll week, the whole week is kind of terrible. It's not my favorite trading week. So I can't make my judgment off of whether I'm a good trader or not based off of just the FOMC week or just off of NFP week, non-farm payroll week, because the market itself acts a little bit jittery and jumpy and it goes real choppy, or what they call consolidation. So I can't make my personal judgment of myself based off of that. Do you understand that? So I have to be the stabilizing factor to come to the market and consistently do my routine. And yes, this week may not have been the best week, but then the next week it just floats and everything is beautiful. And then you tally up your results over the month's time and you look and say, okay, I survived that terrible week. Here's my results. And that's how you get your 80 to 20% win rate. That's how you do it. Not based off of what happened over the last 2 or 3 days, but over the month's time or over a 2-month period of time. That's how you judge your 80 to 20 or 70 to 20, 70 to 30% win rate, because you gave it enough sample testing to say, okay, here's what happened over a period of time. Many of you guys are not making that leap. You're doing it based off of each and every single trade, not over time. So that's why when we send out the email, if you get an email from us, we're showing you here's what was June, July, and August results. And you can see, and everybody saw, oh man, y'all killing the market. Yeah, but see, the problem is we did have losses in there, but the overall wins overshadowed the losses. So over the period of time, yes, we always come out on top. But you don't have patience. All right. Y'all have a good one. I'm 10 minutes over time. Enjoy your Sunday. Thank you.